Hello everybody. Welcome to another preview video here, I guess you could call it. This is, just in case you're new, first time watching this, this is MotoWave on Linux distribution Mint. This is now Oanda. And Oanda, I have a live account with. This is live data I'm about to show you. This is for both Forex and CFD. Forex retail, I'd be kind of careful on because of the market making on a lot of those retail Forex brokers. If you're using MetaTrader or any of those type of platforms, I'd be very careful, again, because they will trade against you and probably cheat you out, kick you out of the stop losses and all that prematurely. That's why I like TradingView. And again, this is MotoWave. I'm going to eventually move everything over to TradingView as I can. I'm just showing you what I'm currently doing. I don't live trade here on Oanda, but I do use this very useful info. So I have 130 different instruments available for me. As I said, this is essentially following the hot capital flow. This is very important to know because I don't care what people say, what people do on YouTube or internet. This is raw data. This is where hot capital is going. Oanda is a huge broker in the space of Forex, and this is what some of the institutional players are doing overseas. So this is not U.S. centric, as opposed to interactive brokers would be more U.S. centric. This is more foreign, higher level overview, which is better for you. So we have mostly Forex, and we also have the CFDs as well, so I can clearly know where money's flowing into as it is. This is a 4-hour time frame, and let's go through this. So you can see here when you start seeing a pair like this, a cross pair, Australian Japanese yen, I clearly wouldn't want to touch this because of the volatility. What I tend to like to see are these really nice upswings, long-term upswings. You may get the occasional downswing, as you can see here with Brent crude oil, and it's in a major downswing right now. And a lot of that has to do with China going through probably already into a deflationary period, and that's cutting out a lot of the oil imports from Russia through India, and Iran's still getting a lot of orders as well for China. How do I know? I'm reading that a lot off of my news service I use from Feedly. It's quite good, and that's where you learn this stuff. So again, you can clearly see this trend is kind of coming to an end, or at least temporarily end. It may go into an upswing again, but it really is determined by China's economy, and you'll be able to see that in this same process that I'm going through. So that's Brent crude. Also note you have a score here, which is important. These again using harmonic scans. The pattern don't matter. What we care about is the filtering of that pattern as well as the direction it's going. I don't really use any of this stuff, but these are potential targets, and these are lower targets on the harmonic scan pattern, whatever pattern it is. Again, these are all built in within MotoWave as well, so there's no programming involved here. So moving on to the next one's the pound against the US dollar. And here, again, this is going back July 16th for a time frame. Decline, meaning the pound is getting stronger than the US dollar. See, it could go into an upswing here, but we don't know. Again, here we have the US Swiss franc. So the Swiss franc is starting to weaken, but here you can see that trend that I'm starting to see. And then if you look at what I put in my posts, I'll have here maybe this will be a trend. This would be something you could consider. But because the slope of the trend is very weak, you might get some intraday trading over the next 24 hours, maybe 2 days. I don't know. But you might get some positive profit. So I don't know. But that's why I put it into a maybe. Now going back to oil, this trend is a definite winner, right? Because it's moving up. Even on the momentum here, when you get those drawdowns, you can see how quick it takes to recover from those drawdowns, and it continues along. So it's still a very strong momentum there. But here on the fundamental, with China economy going down, yeah, that heavily affects oil majorly. So here we have now USD, Mexican peso. Again, I wouldn't touch this because of the volatility. These kind of upswings really scare me because predictably, this is what happens. You get a big drawdown, then goes flat again, then may go up. I don't know. I don't touch those at all. Here we're running into somewhat of a trend here. And let me mention this about gold. A lot of people will buy into gold, typically in US dollar. If you're on YouTube and you're going to follow the Peter Schiffs, it's always going to be US dollar and gold and US dollar. As I've educated in the past, one thing holding these kind of plays is opportunity costs. So if you look at Bitcoin's been flat for a month or two. You hold money in that in a portfolio. Why would you do that when you can put that same money into something that performs like I showed you earlier, or maybe you'll see some other ones that are currently in an upswing. So that's an opportunity cost you don't want to play out. So again, we have gold in Australian dollars. So that's probably, if I put in gold in US dollar, you'll see the difference. But this is not the best currency. So you can see here comes gold, 4 hour, and it's just been a solid decline. Meanwhile, gold in Australian dollar, and the reason for that is because the Australian dollar is weaker than the US dollar. Okay, so again, be aware of that. Now, I wouldn't trade gold in Australian dollar because of the volatility again. That should not be like that with gold, but it's the Australian dollar. Now you may go, it was a Canadian dollar a little better, gold and Canadian dollar, as that comes up. It's a little more stable. It's not as weakening as compared to the Australian dollar, but still, it's weak. It's declining. I wouldn't hold dollar or gold in dollar or Canadian dollar as well. This one, same thing, too volatile with the Australian Japanese yen. Euro 50, again, so this is a stock market, too volatile, no trend, just declining. I wouldn't take that at all. This one was doing pretty good. This is the Euro check. You can see here. The reason why I prefer Oanda for the Forex is they got better pairs than compared to, let's say, Interactive Brokers with the Forex. The only thing that maybe, well, for now, right now, the only thing that Interactive Brokers will have that's better than the Forex is the ruble. As the ruble's crashing this week, that would be a great trade to have. Whatever in ruble as it crashes. You'd make a lot of money. Just take a look at the Turkish lira. A good one, and I keep saying this, is if you're really looking for a nice trade, almost like don't do anything and making money, this is a great one. The Euro Turkish lira. Let me just pull up a monthly chart. You can see how it's just gone skyrocketing from 5 to 29, and that started right around here. 2018, so you would have mushroomed your investment there by so we're going from like $5-6 all the way up to $30. So that's a 6-time investment as well. But yeah, so just these sort of tricks that you know can really make a difference with gold and whatever currency you're playing with. But coming back to this one. This was doing fairly well in this run up, same with this run up, and you can see it decline. So again, unfortunately, it's one of those currencies you kind of want to stay away from. This one's interesting is the Euro HUF, the Hungarian. It's still kind of having, if you're a swing trade, this is a great one to have. But if you look at the monthly here, it's been a very nice run up until here. Now, I don't know historically what happened in August, September 2022 where it declined, so I can't say, but you can see here it may be on another upswing. So you're going from, let's say, down here at 235 up to 425, and that's, doubling your money. Or even right here at 350 to 425, and right here you're doing really well. So again, that's why I use the Oanda CFD. Would I trade on Oanda? Maybe as a buy and hold, yes. But if you're an active, like holding positions for an hour or so or intraday, I don't think Oanda would be the one to be on. If you're going to do that, you're better off to be on Interactive Brokers. Okay, so the Deutsche 10-year bond, the Bund, you can see it's just declining. It's not a good sign because this is one of the safer bonds to be in. But you can see it's declining. That's not a good sign. That's not for Europe, but also globally as well. So here's an interesting one, the India 50. You would think that India was doing really well, and you can just see it's kind of been declining. If I look at the weekly chart here, yeah, it's kind of gone choppy. It's had its heyday here between March 21st, if you look down here, okay, all the way up to here on October 2021. So it's been kind of in a solid decline. That's India generally, and they're saying that India is going through a stock market boom. I'm not seeing it here on India at all. Don't ask me why. I don't write the rules. Okay, I'm just using the data. This is an interesting trend that I'm seeing here with Singapore. A lot of the Asian currencies are weakening, so these are more predictable than investing in gold, and for sure with crypto and Bitcoin, because Bitcoin's been really, for the last 6 months, there's been no predictability behind Bitcoin unless there's a catalyst of some kind that will drive up crypto, namely Bitcoin or Ethereum. So I'm not saying negative against crypto, but just right now crypto's just not performing the way you want. And I'm seeing some of these Asian currencies doing okay as they weaken. Again, we talked about that. Now here's the WTI for oil. Very similar trend between that and BCO. Yeah, it's very similar for WTI. Now here's sugar. How do you know when inflation is really dying off or not? Because we have here an excellent score for, let's say, sugar, corn, food product, this is still elevated. If inflation was to die off, you wouldn't see these in these rankings, especially with a score of excellent. These would drop back and not perform as well. These are not better performers, obviously top of top, but it's still a concern because it says that sugar, corn are still elevated. So if I look at a weekly chart, you can definitely see sugar was a good one to be in, and this is when the Fed got really scared in around probably here, saying this is transitory. Oh yeah, transitory indeed, and cost of sugar is going up. This is a food-based product, and you can see it's still going up, but it's coming down, and the reason it's coming down is because the economy slows down. So the commodity prices on things like sugar, corn, drop back. Now, here's the concern I would have. What they're not telling you at the Fed or the news media, because they're all in bed with the government for the Western governments, what they're not telling you is that what's really driving this is not the war in the Ukraine. It's not, the supply chain. That's all BS. Okay, what's driving this elevation in commodities, especially for food, is because of national debt. As interest goes up, as well as the debt goes up, we're at now 32 trillion. It's crazy. It's going to drive up inflation, and you're starting to see that in both energy and food basics, right? Sugar, corn, as others. That's what's driving it up. And will that inflation drop back? Most likely not. Until they get either a better handle or draw down their national debt. The only two ways to do that from a national debt perspective is two ways. Allow the inflation to eat into the debt, and that's why the government most likely will not respond on it because they want to lower their debt. Inflation is one way to do it, or the other way to do it is through war. And that's why you're starting to see what they're doing by U.S. funding Ukraine. I've seen the cost of uranium's going up. That's all, I hate to tell you, potentially a nuclear weapon. I don't know. I cannot say for sure, but that's what I'm seeing. So you can see here, this is going up. Let's go to corn. Similar pattern. This is dropping, thankfully. but if I look at a weekly, you can see here it's still elevated. It is dropping back, which is good, but I think what will happen as the economy starts to pick up, especially the stock markets, you'll start to see this spike up, as you can see here, little drips and drabs of it. Okay, that's what's going to happen now, and that's why the Fed is going to hold off on its interest calls. But if the economy does pick up, then you can expect the inflation to kick in as well, as again to drive up these food commodities. So one way to consider it, if you're a trader and you're affected by food costs, all you have to do is buy into these products, and you'll get your money back on those returns. That's one way to fight inflation yourself for the little guy. So continuing along with our look here, see here, Hong Kong dollar strengthening, pound against US dollar weakening, so on and so forth. This is where it gets very interesting. Because look at this. This is the yen, okay? There's a reason why a lot of the big HFT shops are opening up locations or reopening up locations in Japan. And this is primarily the reason why. It's because of the yen. Berkshire Hathaway, obviously Warren Buffett has just announced they're opening up an office in Japan as well. The reason is, again, they're not telling you, is this. Let me just pull this up here. Okay, we want USD Japanese yen. Okay, this is what a lot of people are moving into. Okay, when I show you the monthly here, this is why. If you look at the monthly, especially right here in 21, right there, March 21, right, again, look down here, it's been nothing but a rock solid up till November, almost to the end of the year. If you had just traded that and sat in both US dollar, DXY, and this trade right here, just alone last year, you would have gone from roughly 100 to almost, I'd say a 48% return, just holding those two. That's why, and as it moves up again, that's why the guys that Buffett, Griffith, what's his name, Griffin, Ken Griffin at Citadel are reopening into Japan, because they see that Japan is moving up. And people go, well, why is that? Why is Japan able to hold debt and not have their economy affected? And same with somewhat China. The difference between China and USA, difference between primarily Japan and USA is Japanese consumers have a much higher savings rate. So they're not so affected by what's going on in the US. So because they have a higher savings rate, this is why their economy, their yen, even though things do get more expensive, they're able to stay in the game, okay? Especially with their debt going up. But it doesn't work for the West, namely Europe, the Eurozone, UK, basically the Five Eyes countries, US, Canada, Australia, New Zealand. The reason this high GDP to debt to GDP goes up, it will not work for the West. Why? Because Westerners, especially the consumers, are funded by debt. They're funded by loans. They're funded by mortgages. They don't have a savings rate at all. I just read an article. Many Americans will not be able to cough up enough for just a $400 emergency. They get wiped out because they're basically on the fringes of bankruptcy. And homelessness is going up and growing at its fastest pace in the U.S. ever. So that's because it's a U.S. indebted nation. The consumers are driven by debt, and that's the stark difference between Japan, China, and the West. So as the GDP, the national debt to GDP goes up, as it's been going up for the U.S., that's why it's crushing consumers. Okay, just to put that out there. So now we're moving into the very good score. One thing I need to mention about the yen, it's very low volatility. So that's why the wealthy like that currency. You can see here just on a daily view, it doesn't have these extreme drawdowns. I mean, here you do get it. That's when they try to control the yield curve, but you just wait it out, wait for the reversal, and go back in, because you can clearly see this is a growing trend. No different, as I said, with the euro, Turkish lira. So these currencies are great if you know about them. Okay, so that's why the currencies right now, from what I've seen, are the real safe havens for, not gold. Gold, yes, somewhat. As I said, depends upon what currency you're holding gold in. I've shown this on some of my prior streams. Okay, so let's go into the good score here. So here's the Deutsche 30 market, stock market. Again, you can see it's in decline. So this, it may reverse. Will it? I don't know. I think what will happen is there'll be a big crash coming. As I said to somebody earlier, I mean, when you look at today's date on August 16th, 2023, big three events that are happening that are not really getting mentioned in the mainstream. First is Argentina. They just had a primary election. They're basically on the verge of collapsing their economy. So their currency is pretty well in free fall, just like Turkey was. The only thing that may save them, they're talking about this right-winger in the politics who got 30% of the vote in the primary. So saying he may rescue it, I don't know. And he's a big Bitcoin fanatic as well. Also, Russia went through an emergency funding meeting, and they had their ruble crash as well. So they had to raise their interest rate from their central bank by 12% to save that. So that's because of all the negative pressure of, I guess, because of the war, because of the sanctions, I don't know. But that's happening, as well as some other economies. Oh, and then we also talked about China as well. So looking at the UK 100, same thing as Deutsche. I think that you can expect this to go further down. Let's take a look at the UK FTSE. Let's take a look at that monthly there. You see it's kind of wobbly, and comparative to some of the currencies I've shown you, they just seem safer. For me to say that. Anyways. Okay, so here we got Brent crude. We've seen that. Here's another one, the CAC. Very volatile. Sometimes in times of trouble, don't ask me why, but the French 40 or the CAC can outperform. In this case, if you compare, let's say, the Deutsche 30, one thing you can say about the French markets that I've seen, and again, that's all because I'm doing this, that decline is not as stark. So you can see it's continual free flow, but here, right here, you can see it's still volatile, but it's still not, the decline's just not there as much from what I'm seeing. Alright, so moving on. Okay, so we've seen these before. I'm just looking for anything. So here we have the pound against the Swiss franc, flat. Okay, so we talked about gold and Australian dollar, gold and Canadian dollar. Let's see, this is the clear one. You can see it's more stable versus the one in Australian dollar. Actually, it's pretty well similar, I guess. But you can easily get a better snapshot of that within TradingView. Okay, this one's the interesting one. You can see there's a slight incline uptrend there versus some, like, let's say, even the yen. You see how it's flat? And the other thing, as I said about the yen, you see how it's not as volatile? That currency is a really good one to remove volatility. And I think moving forward, volatility is going to be the bane of profit. And I think that's one of the other reasons why Buffett and those likes are moving into Japan, because when it comes to the yen, it's not as stable, right? It just look at this drawdown, and boom, it fully recovers very quickly. So that's why I think the big shops are moving into the New Zealand dollar. But coming back to gold, in New Zealand. You can see a slight uptrend along with the volatility. So New Zealand may be better if that's what you want to hold for any precious metal. Yeah, hold it in New Zealand. There are better ones. I'm not sure if I can see this in Oanda. XAU, and again in Turkish lira. Let's see if we can find that. Let's see what if we have gold in Turkish lira. That's the best one to hold in. No, can't do it. Anyways, moving on. Okay, here's the Australian market as well. Volatility, it's not as crazy. There's no solid drawdown, just as a note there for Australia 200. EU 200 is not too bad as well. Euro against the Danish. Okay, so let's start talking about the Scandinavian countries. Usually, last year, let me pull up either the Norwegian or let me show you USD Norway. Pull that up. Okay, so as a defense haven or safe haven, Norwegian can be, or Scandinavian currencies can be a good one. So if you look at, again, the monthly, it's a solid trend up, which is good. It does go through its down with drawdowns. Now remember, this is monthly, weekly, same. I'd prefer to hold in Japanese yen, if you want my opinion. But because of the clean balance sheets of Sweden, Norway, and Denmark, I wouldn't be surprised that capital will flow into these countries. Again, you can see that in these charts. Again, remember what I said about hot capital? You can clearly see that. Even though it's a lot more volatile now based upon the wicks of the candles, but it's still something to know about. The other thing when it comes to Norway has a $1.2 trillion sovereign fund. Used to be oil that kept them going, but now it's the sovereign fund for Norway. Let me just see here. Let me just also show you the Swedish. This one, I think out of the three, among Norway, Sweden, and Denmark, this Sweden seems to be doing better. I don't know why, but again, let's take a look at the monthly here. Yeah, you can see it's gone flat. I don't know why that is, but again, similar thing as I said about the yen. You can see it's gone up. Really nice rally for last year. So here it starts December 2020, and boom, right here to October 2022. It's had a nice rally on a monthly view. So again, the currencies are a pretty good place to be, just so you know. I'm always handing out lots of gems here. Part of the reason I do that is to get you into the subscription stuff, because you're not going to learn this from anywhere else. I'm just showing you, once again, raw data, US-centric view with the interactive brokers. I'm showing you the foreign view from CFDs and Forex with Oanda, let's say, as an example. Here now with the pound, euro, it's just kind of not going anywhere really. So moving on. The Japanese yen's looking okay. Anything Japanese yen as it weakens, but it's affordable. It trends, and has very low volatility. This one was interesting. You can see here Poland spiked, and then as expected, I thought, oh yeah, it's gonna drop back. That's why you want these solid trends. None of these other currencies are doing that, right? So I don't know what to tell you. But moving on, and again, we have probably our best forex pair out there is the Euro Turkish lira, but that's buy and hold. Again, from this point here, July 18th to here, is opportunity cost, because it rallied here. That's fine, but if you were to still hold on to this long term, buy and hold, you do that, but be aware, So you're going back to July 19th to today, almost a month of flat movement, meaning you're not getting any performance on that capital that you're holding in euro, Turkish lira. That is a clear no-go in terms of investment, because it's an opportunity cost. Here's another wild one. These are the two exotic currencies, both the Turkish lira and the rand. When you get this kind of performance with something like the South African rand, that tells you that the world is in a weird distortion, just really negative. But look at the rallies here. Volatile, but when it moves up, it does well. Right here for that month, it's done okay. And again, that shouldn't be happening with a exotic currency like rand and the Turkish lira. Okay, so continuing along, we've seen these. The Singapore dollar is an interesting one. I've seen this rally pretty good, Canadian and Singapore. Looking here, had a nice rally here, and so on. And that's a good couple of weeks, and it's declined. So if you knew about these rallies, you would have done okay for that time being. Let's see if it's the same with the pound. You see the pound is going into a rally here, and that started beginning of August. So you're going from 170 to 173. Now, if you knew about this with leverage, maybe it might work out. Something I wouldn't recommend, but there are always people like that. And again, the UK 100, just solid decline. India, kind of all over the place, really not going anywhere. Again, the monthly view, I mean, it looks pretty good. That's the first time I really paid any attention to that. But you can see here, this might be a really good one for a long-term trade because of India's economy. That's very stable there, going from 73, let's say 74, up to currently here at 83. That is a really good one to be part of. So that's something I'd probably pay attention to. Again, with the Treasury, I mean, let's face it. Look at that. That shouldn't be happening with the Treasury at all. Like, that's just to show you. That's probably, people would say that's due to the stock market. Well, we had some solid stock market activity in May. And that's a monthly view. Let's take a look at a weekly view. This should not be happening. This should be moving up right now. And the Treasury, especially for a 10-year, that just tells you the credibility of the U.S. is real. That decline. So I would not be holding a lot of U.S. The big players that hold U.S. debt is Japan, China, and a lot of the Mideast. If they decided to give up on that Treasury, they could dump it on the market, and you'll see two big things happen. Is the U.S. dollar will get clobbered. The markets will get clobbered in the U.S. along with the Treasury. So you're definitely on the last mile for the states from the U.S. credibility. And that's why the rating agencies like Moody's and Fitch are putting out these negative ratings, even though the elite current government will just leave it at that, thinking, oh, it's okay, don't worry about it. Again, numbers don't lie. These are raw data. They don't lie. So this is why, I just don't think the treasuries are the safe haven that people think. I just showed you a couple of currencies that are doing better than the treasuries. But again, that's if you only have a U.S.-centric view. So here's the Swiss franc. And again, you would think that the Swiss franc would be a good one as well. You can see here on a weekly view. Forget that on the Swiss franc. So Hong Kong's an interesting one as well. You can see here at the beginning of the month it's rallied. So that's an interesting one, even though it's somewhat pretty well controlled by the Chinese, the CCP, no matter what they tell you. But it's supposed quote-unquote a free market, but at the end of the day, it doesn't matter. You're still able to see that it's doing okay for beginning of the month. So there's another rally here. See the monthly view, and you can see here if it lasts, 7.76. Yeah, so it's gone up, but you can see how crazy the volatility is. So probably what's happening is in China, mainland China, because of the bad economy, the Chinese are probably moving into Hong Kong because they're allowed to. So that's what's driving up the Hong Kong, or weakening the Hong Kong dollar. But you can still benefit from that trade. It's an interesting one, though, and I'm seeing that more and more. All right, so moving along. Okay, so we've seen all of these. As I said with the Mexican peso, it has potential as well, but it's just, I don't know. Let me look at the weekly. Just solid decline. Monthly. Well, it could have had a really lot of potential, but this is just kind of like, no, forget it. Actually, I shouldn't say that. That's a Mexican peso getting strong. That's a good thing for them. But that's a US dollar. Looks like it's weakening. But this trade is not a good one. But the Mexican dollar or peso's got to be doing okay. So natural gas is another one that can do okay. You can see it's spiked here. This shouldn't happen in the summer. But you can see those big spikes, and it goes parabolic and drops fairly fast as well. Weekly view, boom, boom. But this may start to move up as cold season comes in. So that might be another decent trade, long-term investment. But on the monthly, did okay. You would have done okay for last year. But there's a better place to go because you can see the clear volatility and just getting crushed. You've seen the sugar here. CHF, Japanese yen. This is an interesting combo. Again, when you look at the monthly, yeah, looking good and steepening too. And there's no slowdown on the monthly. So these are really good pairs to own. 110 to 166. That's an awesome, awesome, awesome pair. Let's see the Canadian dollar as well. So you can see how the these currencies are doing pretty good. That's better than gold, I think. Again, Canadian pound, Canadian dollar. See, there's just no predictability over the long run at all. Yeah, it's flat. But there are some very, very good long-term trades there. Hong Kong dollar, British pound, the Hong Kong dollar. It's very flat. Not a good one, but I've shown you some excellent, excellent Forex pairs to get into. New Zealand, Japanese yen. This might be an interesting one as well. It's flat on the weekly view. Pretty choppy, but it is trending up. Yeah. So it's not so bad, but there, as I said, there's better, cleaner looking charts. Let's see here. Yeah. Okay, so the South African Rand might be an interesting one as well. Again, flat. 2-week view, one month view. No, very flat. Australia, New Zealand. One thing I have noticed is when you have countries close together, probably in some kind of trading pack like US and Canada, Australia, New Zealand, maybe Hong Kong and Japan, they can do fairly well. So here's the weekly view. Okay, that's gone flat. Monthly view, not very good. But you can see these little mini rallies here. Okay, nowhere as good as some of the other pairs. But another one to pay attention to is, I think it was Hong Kong dollar and Japanese yen. You can see here, nice trend, a monthly view. So things got bad, I guess. But there's just better places to put money into just based upon currency pairs or Forex. Even though long term they can do really well. And you just sit back and relax, just watch those trades on those currency over the long run. Like I showed you with the returns for 2022, last year when it was really bad. Here you can see the SPX. Remember those European exchanges? They had some stability in the price where there was better support than a solid decline. Again, I think this is that U.S. credibility kind of getting killed. The foreign investment's just not there. I can't say. We can see here it's done very well. And again, you know, big solid decline there for the SPX 500, SPY, or S&P 500. It hasn't fully recovered from last year yet. But again, I've shown you the pairs to go into, currency pairs. Yeah, I don't know what to tell you there. Let's see here, BCO. Yeah, okay, so we're now in the good. Now, let me just show you some things that we need to be aware of. Is a couple of things that are really cool. First one, if you want the best, most reliable indicator of global risk, what I would recommend is check out this one right here, gold-silver ratio. This right here, if you looked at the monthly, here's a good snapshot of where we can go all the way back to 2007. So as you know, this is very, very, very accurate, just to show you the risk we're at. So we're humming and dinging along here in 2007. Then right here we get the financial calamity, so it spiked. So that's another good trade to be in extreme down moves, gold, silver. And then as they flooded the market with capital from the Fed, let's say, and other central banks, that risk came down, and then it recovered, and we had a really good run-up in the markets. But here's the thing when it comes to this metric here, is global risk on its own. This is factoring in things like really what's driving it is government spending higher than tax or revenue for a government. And you can see because of that, that puts global risk and it moves it up right here. So now, just under normal circumstances, you can see here, December 2019, we're pretty well exceeded the peak risk back in 2008 and 9, and that's just under normal conditions of the overspending and saturating, let's say, the U.S. with capital fake printing from the Fed adds global risk. Along comes the virus, the pandemic, and look what it does. Extreme, pushes it up. More money's put into the markets by the Fed. What does it do? It lowers the risk. No difference in here. So each time they flood the market with capital, the impact of it means you have to. They probably added $1 trillion here, maybe, of free capital, fake printing, to calm down the markets and the economies. Okay, to get this kind of to get a full recovery. Here after the pandemic in April 2020, they started pumping money into the economy, basically keeping households afloat so they don't go bankrupt. I think it was like $6 trillion they fed into the fake printing in the U.S. government. Look what happens. Finally it calms it down, brings it down, and look where we're at again. It's starting to move up and kind of goes flat. Okay, so we're now still way above the peak of 2008. And what's happening? We got high inflation now. We got war threats. So this indicator or paired indicator, you can use it as, is a really true, high, very reliable indicator on what's going on. So even if you go down to a daily chart, you can see what's going on. You can see the risk here moved up. As I said earlier, lots of fake printing of money calms the situation down, and boom, boom, and look what's happening now. It's starting to move up again, and look at the volume of it. And again, always remember, kiddies, this is hot capital flow. So we know, just look at the trading volume. It's been very, very, very low here, and look at what's happening now to the trading volume since the last July, mid-July. It's doubled. So that's where people are piling into now. Basically, institutional money is moving into this because they know this indicator is really good, and look what's happening. So the economy starts to kind of pick up again. It goes flat. So if you look at the weekly view to check out that trading volume, can see here, this is like smart money, institutional money going into this, right? You see that trading volume picks up, boom, boom, right? And look what's happening again, it's starting to spike again on a weekly view, right? So it's like they know what's going on. So right here in June, boom, they pile in, and look, moves up. It's like easy money for smart money. And you got to know about smart money. You don't want to be the dumb money. The dumb money are the ones that are following what's going on YouTube. Buy gold and US dollar, that's the dumb money. The dumb money also is the ones that are buying into Bitcoin. Nothing against Bitcoin. I love Bitcoin. But if you want to make real money, it's these sort of videos that I put out, watching the Oanda and the real, where the smart money is going, and this is sort of data insight you want to look for. And you could probably get similar things on TradingView, but the way this is built for MotiveWave on Oanda, it's the same pretty well. So continuing along, oh yes, one other one I want to show you is China. Very important here is, how's China doing? So we want China 50. This is the stock market now, China. This is really, really key. Okay, so what really saved the world in 08, I hate to tell you, was China. China rescued the world back in 08, 09. If it wasn't for China, we'd be in trouble. But now we know what's going on with China. As you can see here, it's in serious, serious trouble. Yeah, you can see that right here. It was doing well in July, and it's kind of clearly dropped back. So this is very important. But when I go back to the monthly, weekly, so you can see, oh, it only tracks back in 08. But here's the thing that you want with this. When it spikes, it does a pretty good. Yeah, you can see here, even though the drawdowns, I mean, from, what's that, on the open there at 7,000, and it went up to 18,000, that's almost doubling your money. I mean, in a couple of years, but still, that's pretty good. Now there's one other currency I'd like to show you, is the Mideast. The Mideast is what you want. I'm not sure if this is possible. I think this is what I'm about to show you, is the SAR. This is Saudi. Let's see if that exists. Who will save us next time? It'll be the Mideast. That's where the money is. That's where the growth will be. The Mideast is going to be the critical one now to save us. Anyways, I just want to show you what's going on, why I use this Oanda. My insights does come from watching this pretty well every day, and I do post it. The thing is, I post it, put it behind a membership or a paid subscription. I'm just putting this out as a preview, just to show you what's going on and show you how valuable this stuff is. Anyways, we'll leave it at that. Thanks for watching. Talk to you soon.